The first thing you notice is not the money. It is the scale. $912 million on a screen, moving because someone higher up said move. You were 23, underpaid for your exhaustion, overpaid for your age, and already learning that finance is less about wealth than control. This is the climb from analyst to architect. 8 levels. More access, more leverage, less innocence. By the end, the numbers will stop feeling like numbers. At level 1, your job is simple. Make the spreadsheet survive the night. You do not shape the deal. You make it look inevitable. Your world is discount rates, comparable companies, debt schedules, and comments in red from people who will leave before you do. At 2:11 a.m., the model breaks. A circular reference, a wrong link, 20 tabs open. You fix it before anyone knows it was broken. No client knows your name, no article will mention you, but your fingerprints are already on transactions large enough to change other people's lives. You start measuring time differently, not by weekends but by deadlines, not by meals but by edits, not by sleep but by delivery. Someone above you makes $3 million a year and speaks in 5-minute bursts that redirect entire teams. You begin to understand hierarchy physically. You tell yourself the suffering is temporary, education by repetition, pain converted into competence. That belief is what gets you through the first year. Then the compensation hits your account. More money than anyone in your family earned at your age, enough to justify almost anything for 1 more year. Level 1 ends when the work stops feeling impossible. Not because it got easier, but because part of you adapted to being used. Now you are trusted with more than formulas. You are trusted with process. That sounds flattering until you realize process means absorbing chaos for other people. You join the calls. You do not speak much. You listen to fear disguised as strategy and confidence disguised as certainty. A chief financial officer asks how much pain the market can absorb. No one says pain. They say pricing, appetite, flexibility, optionality. You learn that language is part of the machinery. Harsh realities arrive dressed in neutral vocabulary, and everyone acts like that changes the reality. Your nights are still long, but now your mistakes travel farther. One wrong assumption can alter a negotiation before it officially begins. You close your first major refinancing. It is not glamorous. A wire, a release, a few congratulatory messages, and another live situation by afternoon. The bonus is larger now. Enough to upgrade the apartment, maybe the watch, maybe the story you tell yourself about why you stay. You are still outside the true circle, but no longer outside the building. Doors open a little faster when your title sounds useful. Level 2 ends when you stop asking whether the system is fair and start asking whether you are close enough to benefit from it. At level 3, you do not support the deal. You run it. Analysts wait on your edits. Associates wait on your direction. Clients wait on your tone. You start managing people whose exhaustion looks exactly like yours used to. You recognize the expression immediately and learn not to react to it. Middle market companies become your territory. Recapitalizations, sell sides, rescue financings, defensive mergers. Each one arrives with its own polished version of urgency. You negotiate fees now. Millions of dollars for advice, paper, access, and speed. The numbers are large enough to feel abstract until they hit the invoice. Travel begins to blur the geography. Houston, London, Dubai, Singapore. Same hotels, same dark cars, same restaurants where the important part starts after dessert. You make your first serious moral compromise here. Nothing illegal, Just silence at the exact moment honesty would have changed the tone of the room. The acquisition closes. The bank gets paid. The press release sounds optimistic. 6 months later, performance misses every elegant projection. Life goes on. That is when you understand a career in finance is not built on being right every time. It is built on surviving being wrong efficiently. Level 3 ends when pressure stops feeling external. You no longer carry it. You become one of the people passing it downward. Now the title changes the air around you. Calls get returned on Sundays. Invitations arrive without introductions. Access begins to harden into currency. You stop building models. You build confidence. CEOs do not pay for equations. They pay for certainty performed at exactly the right temperature. You are always in motion now. Boardrooms, private dinners, side meetings, handwritten notes, off-record comments that matter more than formal presentations. A billion-dollar buyout can move faster than a family decision if the right people trust one another and the financing markets stay cooperative. Relationships become structural. You protect a few above all others. They are not friendships, not really. They are channels through which opportunity reliably travels. Your instincts change because your information environment changes. You do not know the future. You simply live closer to the machinery that shapes it. Money is large now, but time feels strangely smaller. Dinners become work, travel becomes routine. Family becomes something scheduled between live situations. You notice you have not felt nervous about a deal in years. That should mean mastery. You suspect it may actually mean erosion. Level 4 ends when advising starts to feel too small. You no longer want to arrange capital. You want to control where it goes. So you leave the bank and join the buy side. The language shifts immediately. No more advising, no more suggesting. Now you own. The salary matters less than the carry. Deferred upside becomes the real narcotic because it ties your future to scale instead of time. You sit on boards. You review management decks. You ask why margins slipped, why hiring expanded, why forecasts still assume optimism. A company with 12,000 employees becomes a line item with a strategy attached. Ownership compresses distance between decision and consequence. You acquire a healthcare platform with aggressive leverage, polished assumptions, and a management package designed to keep incentives sharp and blame portable. 18 months later, costs are cut. Jobs disappear. The board deck says transformation. The internal memo says efficiency. The local town says something else. This level teaches you that vocabulary is insulation, restructuring, optimization, footprint rationalization, words that soften impact for the people authoring it. Your next fund is oversubscribed. Pensions, sovereign pools, family offices, institutions you rarely meet but whose money rewires industries through you. Level 5 ends when a single transaction feels small. You start seeing sectors, systems, and policy as investable weather patterns. Then you move again, this time into a fund that trades the world itself. Currencies, rates, sovereign bonds, volatility, dislocation, panic. The horizon shortens and widens at the same time. You care about central banks, elections, shipping routes, inflation prints, policy tone, weather. You spend months building a position the public will only understand after the move already happened. Patience becomes a weapon. A policy shift lands. Markets lurch. In 1 week, the fund makes more than your old bank division made on some entire years. You expected triumph to feel electric. Instead, it feels procedural. Win, de-risk, rotate, repeat. The emotional range narrows as the stakes widen. A regulatory inquiry touches the fund once. Nothing serious emerges. Still, the lesson is permanent. Oversight studies the past. Money positions for the next version. Political access arrives indirectly. Advisors, former officials, policy interpreters, people who can translate state behavior into investable tone. Old friendships fade here, not through conflict, but through incompatibility. Your life becomes too abstract to explain without sounding dishonest. Level 6 ends when winning stops being personal. The position is right, the thesis is right, the world moves, and you barely feel your pulse change. At level 7, you no longer chase returns one trade at a time. You influence allocation mandates large enough to bend market behavior before headlines catch up. You speak with ministers, central bankers, and fund chairs as peers. Not because you sought politics, but because scale eventually attracts the state. Emerging market debt, infrastructure corridors, energy transitions, reserve strategy. Capital now behaves like foreign policy wearing a tailored suit. You restructure exposure across regions quietly, over quarters, through coordination that is legal, discreet, and invisible from the public balcony. When a country signals stress, you are already positioned, not through a secret tip, but through pattern recognition sharpened by proximity and repetition. Your security is tighter now. Travel is managed, communication is filtered. Public visibility drops as actual influence climbs. You stop doing interviews. You stop attending panels. Important conversations happen in private rooms, where nothing meaningful is written down afterward. A magazine places you on a list once. You ask not to appear again. At this altitude, recognition is not an asset. It is friction. Level 7 ends when privacy becomes more valuable than praise, and invisibility starts to feel like the final luxury product. Now, there is no title anyone would recognize. Trust structures, holding companies, board seats, vehicles across jurisdictions. The architecture matters more than the label. You do not place trades. You do not take calls from intermediaries. You make directional decisions, and other people translate them into action. You read the system before it speaks. Not because anyone tells you, but because you have spent years learning where pressure accumulates before movement becomes visible. Your unrealized wealth no longer feels like money. It feels like stored influence, deferred choice, and permanent exposure to the shape of risk. Family exists in scheduled fragments now. The house is beautiful. The calendar is efficient. Your life is optimized past the point of intimacy. At level 8, happiness and unhappiness both become imprecise. What remains is orientation, where the system is turning and how to stand before it does. And somewhere far below, a new analyst walks into a lobby with polished floors and borrowed confidence, believing this story is still about money. He will learn what you learned. Money is only the visible surface. Underneath it sits access, and beneath access sits structure, and beneath structure sits power. The machine does not need heroes, it needs operators. And when one disappears into the architecture, another arrives to believe he is climbing toward freedom.